You are watching Daily Market Pulse. Today is Monday, April 20th, 2026. If you want a clean daily read on macro and market risk, subscribe for the next briefing. U.S. equities just hit fresh all-time highs, while crypto sentiment crashed into fear territory at 29 out of 100, setting up a critical divergence that could reshape cross-asset flows this week. Here is the framework for today's briefing. Macro divergence setup. Why traditional and digital risk assets are moving in opposite directions. Equity market breakouts, fresh all-time highs across major U.S. indices and what's driving the momentum. Crypto fear mode, Bitcoin dominance rises as sentiment crashes and altcoins underperform. Commodities under pressure, oil pulls back from highs while precious metals hold elevated levels. Week ahead catalyst watch, key macro data and technical levels that could resolve this divergence. Daily financial market update, live prices, gold, silver, crypto, equities, U.S. bonds, and trend. Let's start with the macro backdrop that's driving this cross-asset divergence. Markets opened the week with a clear split between traditional and digital risk assets, with the dollar strengthening to 98.30 and Treasury yields holding near 4.25 to 4.27%. This macro setup is creating divergent liquidity conditions that favor traditional equities over crypto and commodities, fundamentally reshaping risk asset flows. Traditional assets are celebrating with fresh highs, while crypto sentiment has crashed into fear territory, showing how different asset classes are interpreting the same macro environment. What to watch next? The key question is whether lower yield volatility and dollar stabilization can allow risk assets to converge, or if this divergence widens further. Now, let's look at what's happening in traditional equity markets. U.S. equities closed last week with a powerful risk-on surge, with the S&P 500 gaining 1.2% to 7,126, the Nasdaq up 1.5%, and the Dow leading with an 1.8% gain to 49,447. The breadth of this rally, with the Dow outperforming, signals genuine institutional confidence beyond just mega-cap tech, suggesting sustainable momentum. Markets are showing clear appetite for growth assets despite elevated yields, indicating that equity investors are comfortable with current financial conditions. What to watch next? The test now is whether this breakout momentum can sustain above these fresh highs, particularly if bond yields continue to pressurize other risk assets. But crypto is telling a completely different story this morning. Bitcoin dropped 1.3% to $74,581, while the Fear and Greed Index crashed to just 29 out of 100, indicating widespread fear sentiment across digital assets. The high Bitcoin dominance above 57% shows capital is rotating toward relative safety within crypto rather than expanding into altcoins, signaling defensive positioning. Ethereum fell harder at 2.1% to $2,283, while Solana and XRP also declined, confirming that altcoins are underperforming Bitcoin in this risk-off environment. What to watch next? Bitcoin needs to reclaim momentum above the mid-$75 area to improve overall crypto sentiment and allow altcoins to participate in any recovery. Commodities are also feeling the pressure from this stronger dollar environment. WTI crude pulled back sharply 1.5% to 82.59 cents from the prior close near 83.85 cents after trading above $94 last week, indicating a cooling in immediate supply risk premium. The oil pullback suggests markets are reassessing geopolitical premiums, while the stronger dollar is creating headwinds for dollar-denominated commodities. Precious metals are showing more resilience, with gold holding near $4,030 and silver actually gaining 1% to 80.31 cents, reflecting continued demand for hard asset hedges. What to watch next? Commodities remain headline sensitive, so any renewed geopolitical tensions or dollar weakness could quickly reverse these moves. So, what should we be watching for the rest of this week? Markets are setting up for a week of potential divergence resolution, with key technical levels in Bitcoin around $75.08K, and macro data that could shift rate expectations. The outcome of this week's price action could determine whether we see continued equity outperformance or a convergence that brings crypto back into the risk-on narrative. Current positioning shows institutional comfort with traditional assets, but cautious positioning in digital assets, creating an opportunity for significant moves. What to watch next? Watch for any U.S. macro data, Treasury yield behavior, and central bank commentary that could shift the dollar and rate outlook. Now let us turn to today's live market snapshot, where gold, crypto, stocks, and bonds are actually trading right now. Now for our daily financial market update. Here is where the key asset classes stand as of Monday, April 20th, 2026. Gold is trading at $4,830.30, slightly higher on the day, and is slightly higher over the past 5 sessions. Silver is at $80.30, higher today, with a 5-day trend of plus 1.0%. In crypto, Bitcoin is at 74,776, slightly lower on the session and slightly lower over the past week. Ethereum is at $2,286, lower today. Other major crypto, Solana at 84.56, BNB at 624.48, XRP at 4146. On equities, the S&P 500 at 7,126.06, strongly higher. The Nasdaq at 24,468.48, strongly higher. The Dow at 49,447.43, strongly higher. Internationally, the DAX at 24,702.24, strongly higher. The Nikkei at 58,899.49, higher. The FTSE at 10,667.63, slightly higher. On the bond side, the 10-year U.S. Treasury yield is at 4.25%, lower on the session, and the 30-year yield is at 4.88%, slightly lower. Yields remain in focus as the market watches for Federal Reserve signals. Rounding out the macro picture, WTI crude at $82.59 per barrel, sharply lower. The dollar index at 98.30, slightly higher. The picture is mixed across asset classes, with no dominant directional theme yet. Investors are watching macro catalysts closely before committing to a clear risk stance. So what's the bottom line for this Monday? We're seeing a clear tale of 2 risk markets. Traditional equities are pushing to fresh records, with the S&P 500 above 7,100 and the Nasdaq leading tech higher. But crypto is telling a different story entirely, with Bitcoin dominance above 57% and the Fear and Greed Index deep in fear territory. The dollar at 98.30 and yields near 4.25% are creating the conditions for this divergence. For the week ahead, watch whether this gap widens or whether crypto can catch up to equity momentum. Thank you for your attention, and we will see you again tomorrow.